Now let's turn to the Fed. Stocks closing lower today as economic uncertainty continues to weigh on Wall Street, and investors await tomorrow's Fed decision. Well, joining us now is Torsten Slok, chief economist at Apollo Global Management. And Torsten, it's always great to have you on. I don't think anybody, at least not the market, is expecting any kind of actual rate decision. They're expecting the Fed to sit on their hands tomorrow. But a lot of focus on the dot plot, a lot of focus, as we were talking about with Mike Santoli just a few minutes ago, on economic forecasts, especially amid the fiscal piece of the picture and what that'll mean from a data-dependent standpoint. What are you watching for?
Well, the key backdrop for the meeting tomorrow, Morgan, is that we have a situation where the soft data, meaning consumer sentiment and corporate sentiment, has really deteriorated since the last meeting. Consumer confidence for people making more than 100,000 has dropped more than consumer confidence for people making less than 100,000. So if you look across the board, on the consumer side, there is a significant worry about business conditions deteriorating over the next 12 months. On the corporate side, you're also seeing CapEx planning in the Fed regional district surveys that's beginning to show signs of weakness. So the key backdrop here is that there is a lot of uncertainty when it comes to sentiment among households and firms. And that's the key challenge for the Fed and also for Jay Powell in the press conference tomorrow, namely, how do you talk about the hard data has still been okay, but the soft data has been very weak.
And there's a lot of nuance there, to your point. I'm interested in what is triggering that uncertainty. Is it all of the trade and tariff angst right now and all of the back and forth that we're seeing with that, especially ahead of this April 2nd deadline? I asked that knowing that you wrote a really interesting report here recently called Sharing the Benefits from Trade More Evenly. And you note the fact that the U.S. actually has lower barriers to trade than really any of the other countries in the world, including some of the ones we've enacted trade wars with.
Absolutely. And it is definitely the case that the U.S., both when it comes to actual tariffs, has a much lower level than the rest of the world, but also when it comes to non-tariff barriers, meaning other restrictions on trade, the U.S. is also much more open than many other countries. So in some sense, the trade war, it does come from a fair point, namely that the U.S. is more open when it comes to the level of tariffs, and the U.S. is also more open when it comes to non-tariff barriers. So from that perspective, the trade war is exactly an attempt to try to level the playing field with other countries that have had more tariffs and that have had more non-tariff barriers. That, of course, becomes important when you think about how do you then get to the point of leveling the playing field. What is that process and what are the mechanisms through which you level the playing fields? And that's, of course, what markets have been responding to, namely that the introduction of very significant tariffs, including on Canada and Mexico, of course, also on China, has created probably some increase in uncertainty. Combined with those, the risk, of course, of government workers. Remember, for every government worker, there are 2 contractors. That means that the true number of people in the federal government is, of course, around 9 million, also creating some uncertainty for households.
So, Torsten, more broadly, here in the U.S., the people who buy stocks seem to feel very differently about the economy from the people who pay rent right now. And the people who buy stocks are looking forward to tax cuts, corporate tax cuts later this year. The GOP is trying to get there in part by cutting Medicaid. Seems like somebody's going to emerge from this situation unhappy. Who do you think it is, and how should investors prepare?
You're right, John. I mean, there's always a discussion when you change anything in the tax system. It is almost always the case when you change anything in government policy. There will be someone who is winning. There will be someone who's losing. It's very rare that you have one simple policy and everyone is winning. So that's, of course, why if you raise taxes, if you lower taxes on certain households, if you raise taxes, lower taxes on certain companies, it will have different implications. And you're right. All the things that you listed, they are indeed factors that at the moment, of course, we are trying in the economics profession to put into the spreadsheet to figure out what is the net effect? Is this good ultimately for the S&P 500 and the economy, or is it something that's going to drag things down? And of course, uncertainty at an elevated level is probably going to be somewhat of a drag for a while. But other things, if we do get more tax cuts, if we do get more deregulation, if we get more energy production, will all be tailwinds to growth. And that's why you put all that up on the scale and try to figure out exactly what's coming in the near term and what might be coming later this year.